All right, so good morning, everybody. Thank you for joining us in this Mexico 2020 tax reform. Again, thank you very much for joining us. I have here with me our tax director, Jose Jimenez, and also we're going to be joined on this conversation about the tax reform by Jose Sierra, one of our tax managers, and also we're going to have Daniela Vasquez. So thank you for joining us again. We're going to begin, but very quickly, some housekeeping rules or notes here. If you want to ask questions, I believe there's a box on your right side of your screen where you can type a question and then just click on send, and that question will show up in our screen. We're going to try to, as we go along, we're going to try to leave all those questions to the end. If we, for whatever reason, do not have enough time to cover those questions, we will absolutely send our answers on an email. So let's begin on our presentation. So again, we're going to be talking about the Mexico 2020 tax reform, and these are going to be main changes and implications. So please note that what we're going to be talking about cannot be used directly as a tax advice. So please make sure that when trying to apply any of the things or any of the regulations that we're going to be talking about, please talk to your tax advisors before applying any of the rules, regulations, or taxes that we're going to be reviewing on our presentation today.
Thank you, Raul. And just to introduce myself, I'm Jose Jimenez, tax director here, participating with Raul and my team. This that Raul is mentioned is very important. It is pending to publish, as you are aware, we have the tax miscellaneous regulations that are published also on a calendar year. It was published 2020 last week, the proposal for the new rules. They were issued this week, approved. So it is very important that we need to confirm, because many of the new regulations that came in this tax reform will be clarified or regulated on these new rules. So it is very important that take this as a general understanding on what the tax reform will be. But of course, there will be many things that even for us as a tax advisors, it is pending to clarify and be sure that we are following the correct procedure, right?
Absolutely. So yeah, again, so as we move along and we look at some of these tax regulations, when you read those regulations, there are things that sometimes are hard to understand what they're trying to say on this specific regulation. So we believe that the government early next year at some point will publish additional clarifications, or as Pepe was saying, some additional rulings to make sure that the specific tax or the specific regulation is going to be correctly understood or correctly applied. So on the agenda today, we're going to be talking about some economic indicators on how Mexico is doing. We're going to talk a little bit about the revenue law, which is known in Mexico as the GEPS regulations. Some very interesting changes on the digital economy, which we're seeing all over the world. Some changes that we're going to look at also on the federal tax code. And at the end, hopefully we're going to have some time to go over some questions, some Q&A. So some economic indicators on how Mexico is doing, and I think this has been obviously all over the law, all over the news. and what the GDP for Mexico has been on the last year. And this growth has been, and it will be by the end of this year, probably close to more likely 1%. We don't know if it's going to reach 1.2%. We believe that it's probably going to be even less than 1%, but it hasn't been a good year for growth for Mexico on this first year for this new presidential administration. So for 2020, we're expecting between 1.5 and 2.5%. And again, we believe that it's going to be more leaning towards the 1.5%. The good news, though, is that for the inflation, Mexico still very stable, and the inflation for the closing of 2019 is going to be 3.2%, close to 3.2%, and we believe that the goal for 2020, according to the government, again, is going to be somewhere around that same 3%. The dollar, again, has been very stable throughout the year, despite all the different things that have been going on in Mexico, despite the not yet signing of the Mexico-Canada-U.S. treaty, which is right now being reviewed by the U.S. Congress. And it has been very stable. So for the closing of 2019, the currency between between the peso and the U.S. dollar, in average has been 19.40, and the goal for 2020 is somewhere around 20 pesos per $1. So what are the priority projects for the Mexican government, for this new administration? Well, they are focusing on this different areas. A very strong youth program where a lot of funding is going to be going to the youth and trying to put in place different type of scholarships to bring education for the Mexican youth. They are also trying to focus a lot on senior citizens, trying to rescue the south of Mexico, basically the agriculture, Mexican agriculture. A lot has been said about the next one, which is this new railroad that is going to go through Mérida and Quintana Roo, which is what is known the Maya region in southeast of Mexico. And obviously, also, again, another topic that has been on the news the whole year, which are the Mexico City airport and the new airport in Santa Lucia. So a little bit about the revenue law. So where is this funding coming from? And the administration, the new administration is thinking that, or at least the plan is that there's going to be an increase on the income tax revenue that is going to receive from taxpayers on a 5%, 1% additional on the value tax, what they are expecting from the excise regulations, the excise law. They are expecting to increase 17%. These are regulations specifically trying to tax a lot of those beverages that have a lot of sugar. And at the end, they think they're going to be able to increase 1% on the foreign trade, getting additional funding from duties paid on imports.
And here, Raul, just to add a little bit, is like we are aware that the government has the flag to go and increase, taxation for taxpayers. In the speech of the president, we don't want to increase taxes. What we want is to avoid corruption, right? That is the issue that we have seen here in Mexico. There is a lot of corruptions, a lot of taxpayers who issue fake invoices or fake deductions. So as you can see, they are not forecasting a big increase on collection. What they want is to get saving through avoidance of corruption, and that is the forecast that they have for the taxes. As Raul say, also adding to the excise tax, as you are aware, in Mexico we have a big problem of fatness. There is a lot of people that is getting sick, and this is causing a lot of expense to the government because we consume a lot of sodas and sugar meals and sugar beverage. So increasing the excise tax on this kind of food, it is supposed that will decrease the consume of this tax or of this kind of beverage, right?
Yeah, which I don't think is going to happen because we all like sweets. So
yeah, we still buy Cokes and you know, like all the sodas that we want.
Absolutely. Okay, so on to the next. A little bit talking about additionally on the revenue law. So surcharges, these are the interests that normally taxpayers pay when they make late payments on their taxes or duties or things of that nature. So that's gonna remain on 1.47% per month. So not very smart to finance your company through taxes. The income tax withheld on interest will go up from 1.04 to 1.45%. So obviously, this is going to hit, elder people that mostly live out of their interest on their savings. So they're going to have to pay additional 0.41% on the interest earned on those savings. An additional incentive will be applied to small companies that sell books, newspapers, and magazines, and these are individuals and corporations up to 6 million pesos. So this is going to be an additional deduction of 8% out of their total expenses. As we already know, there was a big change on what it used to be known as the universal offset. And this was when you were able to use your receivable value-added tax and use that value-added tax to pay or to offset against income taxes or withheld income taxes that you owe to the government. So that was a big change for this year. So that change has already been incorporated into the federal tax code in the value-added tax law. So you no longer can use your receivable value-added tax to pay other taxes other than the same value-added tax. And now the government, what it's doing for the IMSS, which is the Mexican Social Security system, is allowing for 2020 partial payments and agreements up to 6 years, but only to federal entities, municipalities, and cities or decentralized agencies. And this is because a lot of small cities and governments around Mexico owe a lot of money to the Mexican Social Security system. So they are opening this option for those governments to be able to pay that debt in agreements up to 6 years, which is not given to any corporation or any individuals. They are given this opportunity only to cities, municipalities, states, and government, decentralized government agencies.
Yeah, and in this way, of course, I put it in the other side, like why entities who may have like this kind also that we haven't paid, why they are not also having this benefit, right? Like to have an installment or the possibility to pay in a longer term in order to regularize your situation before Social Security, right? So I have been asked by other entities like why we don't get that benefit. We don't know why, but at the end it's something that will help governments because also many states change of government, as we are aware. Like all the parties are changing to the same party of the president in other states, so maybe that's why they are doing this change.
Okay. Moving on. So some of the incentives that will stay, but they're putting a little bit of a limitation in terms of the amount of, for example, on the biodiesel incentive, they are keeping this biodiesel incentive, but only for companies that are reporting taxable income up to 60 million pesos. The same will be for the diesel incentive and the toll incentive. For example, on the toll incentive, for companies that have public transport by land, private or tourist transportation companies, as well as transportation of cargo, they will be able to credit 50% of the tolls paid against the annual income tax. However, this will be only for companies that have incomes up to 300 million pesos, which, as we know, a lot of the companies that are in this area have revenues over and above 300 million pesos. So they are keeping the incentive, but they are actually limiting the incentive to this type of to companies. They are again keeping the mining incentive of the mining rights that companies pay to be able to exploit a mine, and you can take that over and above 50 million pesos in revenue. So other incentives that have been eliminated from decrees but added to the actual either the income tax law or other regulations, one of them is the incentive on basic goods donations in the way of food. Talking about sharing incentive, all handicapped people now has been incorporated into the income tax law. Cinematography incentive is also now in the income tax law, and this is very widely used in Mexico. And it has been widely used in the last 10 years as the movies being made in Mexico has been booming in the last, I would say, the last 7 years or so.
And it have worked because now we have directors who won Oscars, right?
Exactly. Exactly.
So I think that this incentive for cinematography industry has been good for all Mexicans, because now we have all US and Hollywood is looking here to Mexico to make more movies, right?
Correct. So let's jump to the next one. So the income tax law. So as we all know, a lot of the regulations that we're going to be talking about here that we have heard from a lot of our clients that are very tough regulations, but it's not that Mexico is coming out with these new ideas or these new regulations. What Mexico is actually doing is just following the OECD action plans, and is doing the same as other countries around the world, specifically on Europe. So a lot of the regulations that we're going to be looking at have to do with the OECD action plans. So in talking about those specific action plans, one of which is the address of challenges of the digital economy for taxation. This is very huge, and we're going to be talking about how companies that provide different type of services in Mexico, but they do not have a permanent establishment in Mexico, will in some way or form have to either withhold taxes or pay some type of indirect taxes in Mexico. Also, the OECD and Mexico will try to neutralize the effects of the hybrid mechanisms that exist out there, obviously to try to reduce the tax basis of companies in Mexico. Action number 4, to limit the erosion of the taxable basis through interest. And this is another one that is big, and also, as you may already know, the US has a very similar regulation to this one, and we're going to be talking about that. Prevent the avoidance of the permanent establishment. So there's a couple of changes there. The new regulation looks very much likely the one that we already had up until 2019, but there are very small changes there, but we must pay attention to those small changes. And the last one, which this is a big one, that will require taxpayers or their tax advisors to disclose aggressive planning mechanism, and this is tax schemes that will have to be disclosed and submit or inform to the tax authorities. So permanent establishment, and I don't want to take you through the whole thing, because again, this is very similar to the regulation that we already had. And just reminding that if someone is doing or performing transactions in Mexico without having a permanent establishment through an independent agent, and this independent agent being an individual or a corporation, signs contract on behalf or settles prices or settles transactions on behalf of the foreign entity, that may very well trigger a permanent establishment for the foreign resident. So that's very similar to what we had up until 2019. But one thing that we want you to consider is the number 2 line item there that says, consider the disposal of property rights granting the leasing of a good owned by the foreign resident. And this happens a lot through Airbnb. So people having a property and real estate in Mexico and renting that property to individuals or, again, corporations. So it could trigger the permanent establishment if that person does not, the individual renting the property does not withhold the income tax from the payment of that rent. So if that doesn't happen, then the foreign resident may very well trigger permanent establishment, which will make him have to pay full taxes for the revenue generated from the rent of that property.
And also, Raul, here I would like to add that remember that in Mexico we have a whole section in the corporate income tax law that talk about payment to foreign residents, and there is the possibility to withhold corporate tax when you are paying for a leasing of a property or of a good located in Mexico. So what they are doing here in this modification of the law is that if you don't consider this payment under the Section 5 of the Mexican corporate tax law, then you will trigger a permanent establishment. What they want is to avoid the not paying of taxes. And what we were discussing is that even though we consider it is very complicated, if, for example, I want to lease a house in Cabo and I pay with my credit card and the owner of that house in Cabo lives in LA, how does the, I don't know, SAT in Mexico will identify that payment, right? So that's why they are modifying this definition in the law to make that these taxpayers abroad became a taxpayer in Mexico. Remember that a permanent establishment in Mexico, it is considered as a regular entity and will pay taxes as this is a corporation, right? And just to add there also, there is a definition. Remember that Raul was talking about independent agent, but there is also the concept of dependent agent, and a dependent agent will be someone hired directly by the entity that is working here in Mexico on behalf of the foreign entity or the foreign resident and is engaging or signing contracts on behalf of the foreign resident. And there is a definition in this last paragraph that it says that when the agent acts exclusively for their foreign resident, it will not be considered as an independent agent. So what we were discussing here, Raul, I don't know if you remember that there is no an explanation on what is considered exclusively, right? That's something that we will need to analyze, because maybe if I bill 80% of my, or I'm collecting, if I were the dependent agent and I'm collecting all my income by 80% of this foreign resident, and I have 24% from a Mexican company that is paying me for other services, maybe I could say that I'm not considering as exclusively independent agent of this entity. We don't know that, and that is something that we need to have in mind. And of course, if you have the scenario, we can analyze.
Yeah, it's very important we cannot generalize. I guess that's the bottom line. We have to be smart about it and take a look at each specific scenario, because if you read that last paragraph, how do we know what is an almost exclusively on behalf of the foreign resident? We don't know, is that 50%, is that 60%, 80% of my income coming from that foreign resident? We don't know. So each transaction, each situation has to be analyzed individually. So what is not a permanent establishment? And this is very similar to what we already had. You know, single place of business for purpose of carrying out preparatory or initial auxiliary activities, the use of installations to exhibit or store foreign resident goods, place of business for the sole purpose of acquiring goods for the foreign resident, place of business for propaganda activities, etc., placement of other similar goods or good fiscal deposits of goods. One thing that we have to consider, though, is that this will not apply, and I'm going to try to go directly to the example that we have on the next slide, because I think it's going to be easier to explain. So there's a concept that is now used in this regulation that is called cohesive business transaction. So what do we believe this means? What does cohesive business transaction means? And we're going to see on the next slide what we believe that means, or what they're trying to say. So if you have a corporation A in the United States, and then you have a corporation A as well in Mexico, which is not a permanent establishment, but has goods in Mexico on fiscal deposit, which means that no duties, no valid tax has been paid yet for those goods. They are on a fiscal deposit, and they are owned by Corporation A, which is a foreign resident. However, this Corporation A has a related party, Corporation B, in Mexico, and it sells goods to that Corporation B. So what happens at that moment is that Corporation B goes to the fiscal deposit and takes goods out of that fiscal deposit, pays the duties, and pays the valid tax. In a situation such as this, when A and B are related parties, it could trigger a permanent establishment for Corporation A for those transactions that are happening between Corporation A and Corporation B. So again, this is our interpretation of what cohesive business operation would be. I believe that there's going to be a little bit more of clarification, like we said, on the first few months of 2020, because it's a very general kind of a word, just to say cohesive business, and it opens a lot of questions. But based on our interpretation and what we were able to dig, this is what we believe is going to look like. So again, each individual situation would have to be analyzed. So we recommend talk to your tax.
Well, And talking about the action 12 that we were, action 2, sorry, that we were talking about on the BEPS, one of the new articles, this is a totally new article in the Mexican corporate tax law that is talking about transparent fiscal foreign entities, as we know in US, LLCs, and also trusts, right? As we are aware, there are also trusts that for tax purposes are considered transparent also. So what Mexican tax there are many Mexican is if you are under that scenario, you will need to pay taxes in Mexico as you were a Mexican corporation. So it is pending to define the rules because maybe in a corporation that is located abroad or even a trust, the only taxable income should be for the individual or the portion of the profit or the income that has to be allocated by the Mexican resident. So that is something that, as Raul mentioned, it has not been published how we're gonna consider this taxable. We have another example in the next slide on how the tax has to be determined. And well, I was putting here the what is the definition of a transparent entity. As we are aware, a transparent entity, as I have the example there, is any entity that do not pay taxes as a corporation and the tax is lead to the shareholders. The shareholders will be the one who pay taxes under that scenario. It's very important to mention that if in the treaty that Mexico have in place with this country where the shareholder or the trust is incorporated or the LLC entity, if it is mentioned that it is exempt, then the treaty, of course, will be the source of taxation that we need to consider. Regarding the same disposition that we were talking about, we need to consider that the tax has to be paid, as it is mentioned here, only paid by corporation duly incorporated in Mexico, permanent establishment in Mexico, and individuals also in Mexico. So what it is saying here in this example that I have is like the LLC do not pay taxes in USA. In most of the cases, an LLC is transparent. So if it's in Delaware or another country, another state that is not considered taxable, will not pay taxes. For Mexican tax purposes, if there is a shareholder above that LLC, even if the individual or the shareholder did not receive any cash for the profits that the company is distributed, it will be considered as a taxable income for Mexican tax purposes. And it is very important to have this in mind because this will be a taxable income on accrual basis, right? So the Mexican tax legislation, it is stipulated that we will need to have a new account, like the net tax profit account. I don't know if you are aware of that. In Mexico, we have a net tax profit account where we allocate all the tax profit that we generate as a corporation. It will be the same for individuals or corporations who will receive a dividend or an income through these transparent entities. And what it says is that when you earn the profit, it will be taxable. It doesn't matter if you don't collect it, but then when you collect it, you will have a credit because you already pay taxes on an accrual basis.
So just to keep in mind, this is for those flow-through LLC entities that have on top of them a Mexican tax resident.
Correct.
No, for those companies that are flow-through LLCs, one single member, where the taxpayer on top is a U.S. resident. So again, this is for flow-through entities, LLCs, that on top of them, it's a Mexican tax resident.
Yeah, and also very important to mention that it doesn't matter how many companies up you have to go, because maybe it could be a LLC in US and above that LLC, it is an island Cayman entity, and above that entity, there is the Mexican shareholder or the Mexican entity. We need to look on that scenario. We need to go up to the last person in the chain in order to determine if there will be a tax for the Mexican individual. That will be something that we will need to ask, because many many times the shareholder doesn't let you know that he's above a Cayman entity. So that's something that we as a tax advisor need to confirm with our clients that are on that scenario.
Well, as we mentioned in the early in the presentation, revenue law eliminated some incentives that they were contemplating in there. However, they were incorporated in the income tax law. One of them is the determination of tax profit, estimated monthly income tax payment, which incorporates the reduction of the employee's profit sharing paid previously. And this can be applicable since in the installment of May, and it can be done in a cumulative way through all the year. Also, one of the other changes that contemplate this reform is the outsourcing. Our last reform contemplated that for the outsourcing obligation, company must have all the information that the subcontractor vendor needed. This was the payroll receipts, the proof of payment of the Social Security fees, and the VAT payment. However, all of this is eliminated of the corporate income tax law, and it just establishes that the corporations need to comply with the new requirements that we are incorporated in value-added tax. We'll be seeing this part later on in the presentation.
So what is important to remember on this one, and I believe a lot of you remember this, but along the last, I would say, 2 or 3 years, we have been talking about the obligation of making sure that when you have a subcontracting party, you're paying a subcontractor, that you want to make sure that that subcontractor was paying Social Security taxes, state taxes, and you know, obviously their monthly estimated income tax, et cetera, et cetera. So you were obligated to collect this type of documents to make sure that they were in compliance, in full compliance. Otherwise, that payment was going to be considered a non-deductible expense. So, you know, like Daniela was saying, they are eliminating this from the regulations and adding a provision where now instead of collecting that type of information, now you're just going to have to withhold 6% out of the valid tax that you're going to be paying to this subcontracting parties.
Okay, and also the government has established a new non-deductible scenario. This looking forward on following the BEPS actions and rules that are globally in place to prevent, obviously, the erosion of the tax basis. And this new regulation or non-deductible specific scenario mentions that the payments that we made as Mexican entities to related parties through a structured agreement or to any specific related party in the outside of Mexico that are subject to a preferential tax regime, that this tax regime, well, it is that the entity that it is in the outside of Mexico applies at 22.5% of the corporate income tax, that it represents the 75% of the Mexican rate. In this specific case, it is those entities, the ones that are considered as a preferential tax regimes. So this specific rule mentions also that the payments are going to be direct on indirect pay that used to carry out other deductible payments to other members of the group, and in which the taxpayer participates or one of its related parties and whose consideration is function of payments made to preferential tax regime favoring the taxpayer or one of its related parties. So what does this mean? We show here in this slide a quick example that can explain a little bit better this specific rule, that it is if we as Mexican entities pay a specific concept as they can be, as arguments say, technical assistance, royalties, or any other concept to a foreign entity, for example, in this case or example, the entity B, that it is not a related party of entity A, that it is established in the US, we realize that payment as Mexican entities, we take that deduction, and the US entity takes the income of that payment. However, this is not a related party, the one in the US, but at the same time, the US entity realized a payment to another country that in this example, it is Hong Kong, that it is in a tax regime or a tax haven, as we can say, and we have a net effect in the US entity. So in the US entity, we have the accumulating of the income and also the deduction of the payment that we realize to the Hong Kong entity. And anytime that the Hong Kong entity, it is a related party of the Mexican entity, and this ultimate beneficiary of the receipt of that payment, it is in a tax haven, the Mexican entity is going to have a non-deductible scenario for the payment that we realize to the US entity, even if we didn't realize the payment directly to the Hong Kong entity. So we can say that the bottom line of this new non-deductible regulation is that as Mexican entities, we also need to have keep track of which are the ultimate beneficiaries of the payments. So if we realize a payment to a non or a related party in the US, and this entity realize the same payment to another country that it is considered a tax haven, well, we are going to have a non-deductible scenario. So a recommendation that we can set it is that we can, well, keep track of that movements, of that specific operations, if we can have by writing the confirmation that the payment that we are realizing, it is not reaching an ultimate beneficiary in a tax haven. That's going to be a part of our defense file here for Mexican purposes.
And that is a good point, Jose Luis, because this is something that happens a lot in worldwide corporations, where maybe there is a Mexican subsidiary that it is being held by a UK entity, and that UK holding have subsidiaries all over the world. So maybe the UK entity could say, okay, I have an agreement with this supplier that is in US, but at the end, in this structure operation that we are talking about, we need to confirm that for the payment that I am doing to this U entity, in the example that you have, is not going back to a related party entity as a payment where this payment is not considered as taxable. As we were discussing about this morning, is like what government are looking for is tax symmetry, right? Mexican entity, if you can see at the bottom, is having a deduction. US entity have an income and have a deduction. It have zero effect on the taxation. And then the Hong Kong entity who is collecting an income has zero taxable effect. So the only country who is getting a deduction is Mexico, right? In this scenario that we are looking for. So it's easy to understand. We need to confirm, and that's something that I think we have been talking about. This is, if I have a deduction, other country needs to have a taxable income, right? This is like the main purpose of this change. However, it is very clarified that it could be using this hybrid mechanism. This is also focusing on this hybrid mechanism that is mentioned in the action 2 of the BEPS. So we need to be sure that we have the confirmation, because even for us from tax as a Mexican advisors, how I can know that? Because at the end, what I would collect in most of the scenarios is I will have the agreement from USA, I will have the invoice from USA, but I'm not aware on the next step of that transaction, right?
Correct.
So going forward, we will reach one of the most controversial topics that we have, as Raul mentioned, from US. This is not new. What I don't remember what is the name, Raul. Is BIT? Is BIT who limits?
I honestly, I don't remember.
Yeah, I don't know if it's BIT or it's guilty, but I'm sure it's one of those who has like the same tax effect that limits the tax deduction. If we are saying something wrong, let us know. We are not US experts on taxation, but I have a little bit of background. So what this new provision is making us is like, it is limiting the deduction from Mexican taxpayers. Have in mind that this is related with all the interest that taxpayers will have, and this means interest with a financial institution, with a bank, even with a related party abroad, or with a national related party. Every loan that triggers an interest on that account payable will be considered interest for these Mexican tax purposes and not deductible amount. Here, and I will give an explanation more easy, because here is mentioned that how I will determine that not deductible amount. It will be determined by multiplying by 30% my net tax profit, comparing with my net interest for the period. And as I was saying, I will put a clear example in the following slide. But before getting there, have in mind, and this is something also that we were discussing, Raul, that this will only apply if you have accrued in your P&L more than 20 million pesos, that it will be like $1 million, more or less. Yeah. Let's put that in US dollars. If you have in your P&L each year, we need to take a look of your P&L each year. And remember, this will become mandatory since January 2020. So at the end of 2020, I will turn around and see your P&L. And if I see that you have less than 20 million pesos as an interest, I don't have to do anything. It's very easy as that. Just have that in mind, right? If I have 20 million pesos and 1 peso, then I will need to determine the net deductible.
Exactly. So your first test is that 20 million pesos. If you have less than 20 million pesos, you're all set. You don't have to do any other calculation. All your interest is going to be deductible. But if you have 21 million pesos of interest, then yes, you will have to do the calculation that we're going to take a look at.
Finally, have in mind, and this is something that, if you are aware, with ThinkCap, that is also OECD regulation. All the countries part of the OECD knows about ThinkCap. So in Mexico, there is this very controversial topic regarding what is considered interest. Under corporate income tax law, there is a definition that for Mexican tax purposes, the exchange rate gain and the exchange rate loss, it is considered as interest. So when we are under ThinkCap scenario, most of the times the exchange rate loss could be higher than the interest that we are considered as not deductible. However, thanks to in this scenario, they clarify that for purposes of this determination, we don't need to consider the exchange rate loss. So we need to have in mind that we need to take out that amount from our figures. So it is very good to have this clarification, because for ThinkCap, until now, we always have that doubt, right? If I have to or not consider. And finally, as you are aware, in Mexico, we are also government is supporting the oil and gas entities, because now we are open for market. So it's no longer more a national industry, the oil and gas. So there are many foreigners who are coming to Mexico to begin to subtract oil from the ground. So right now the government know that for that sector, the amount of accounts payables or the loans that this kind of industry needs will be higher, but they will not be considered for this limitation. Also in the sector of energy and water providing to services. Going forward, and this is what I was talking about, the example that I think is more easy to determine, as I was mentioned. First, we need to determine once that we know that we have more than 20 million in my P&L for interest accrued, what is different, or what is called my attention, is that my net interest will be my deductible accrued interest minus my taxable accrued interest. So in most scenarios, what I would say is there are not so many taxpayers who will have a taxable accrued interest, since it's not a lot of an operation that in Mexico is common, but that would be your scenario. We need to net that. And then I will need to decrease the 20 million pesos that it is given as an exempt amount, right? So also something that we were discussing, Raul, is I don't see many companies having 20 million of interest in the P&L, right? We are talking about a loan of $20 million to reach if I consider a 6 or 7% on an interest rate, that is the most common rate, I think it will be very complicated. But even though we need to have in mind that if you are on that scenario, then you may have a non-deductible effect. Then, as I was mentioning, I need to determine an adjusted tax profit that will be my base to compare with my net interest. And what is my adjusted tax profit? Well, I need to take my tax profit, decrease it by my tax depreciation, decrease it by my amortization, and decrease it by the tax losses. As Raul mentioned, it is very similar to the EBIT, right? As talking about financial topics from US, it is considered also as an EBIT. Also, if in the net interest, your taxable accrued interests are higher than your deductible accrued interest, there will be nothing to determine because the result will be zero. Will be zero. So taking in consideration that step that I was mentioning, well, what I need to do is, now that I determine my net interest, if my net interest is higher than the 30% of my adjusted tax profit, the difference will be my interest not deductible. One of the dispositions that it is very important to have in mind here is that if, as I was talking about at the beginning, if I am under the scenario of thin cap and I already have a non-deductible effect for that thin cap, those interests shall not be considered in the determination, because if I consider that, I will have a double non-deductible effect. Also, it is allowed that the amount pending to be deducted in this scenario, as you can see, will be allowed to deduct in the following 10 years. So I was also discussing yesterday here with my team about this, because this will be a very important deferred tax effect that we will need to consider, because under the Mexican tax law, I am in a scenario of a not deductible in the current year, but in the following years, I may have a deduction. So we will need to be very sure that we consider this forecast for the deferred tax calculation. And well, what we need to have in mind is that we will have an account and we will need to have a work paper, like as we do with the tax losses, where I will determine what is my interest pending to be amortized each year. And I put here that how is determined. I have my not deductible interest of the year plus the interest of the previous year that I was determined not higher than 10 years or less than 10 years, because in the scenario that you exceed the 10 years, then it will become a permanent not deductible. And of course, I need to decrease my amortized interest that I apply on the determination that is established here. Next one, Dani, please.
Well, as Jose mentioned earlier in the presentation, one of the objectives of this reform is to avoid tax evasion. Therefore, this reform includes the elimination of privately held FIBRAs, which are infrastructure, trust, and private real estate. These schemes are not considered clear enough for in the moment of the tax structure. However, corporations that use this scheme will have 2 years upon entry into force to pay the income tax incurred by the profits obtained in the sale of goods made to the trust.
Yeah, and here is very important to have in mind that FIBRAs, that is a trust, a real estate trust, it was used and it was very common with entities like if I have a land and you have the money and we want to create a shopping center, the action of put the land in this trust will not consider a taxable situation or a taxable act where we were going to pay tax, because for Mexican tax purposes, that will be considered a disposition of the property when you put the land in this trust. So these kind of trust FIBRAs were used to avoid that taxation, because at the end it was made for a purpose of generating income. And now that they eliminate these FIBRAs, what Danny is mentioning is that tax that was avoided at the moment of providing the land now has to be paid, and they will give us 2 years to pay
Yes.
that tax, right?
Yes, the gain will need to be reported in annual return of 2021.
Okay.
Okay. Another of the change that incorporate income tax law is that corporations under agriculture law will have a benefit that if at least 80% of their income comes from industrialization and distribution of products derived from their activities. This reduction will, it will be only applicable to this type of corporation up to 5 million pesos, and the reduction will be 30% of the determined tax.
Yeah, and this is something that is in Mexico. All the agricultural entities have a benefit of tax decrease. As we were mentioned at the beginning, the government is supporting the south of Mexico regarding the agriculture sector. And what is happening is that sometimes also it is mentioned here, the distribution of those products or industrialization of those products were not considered as an agricultural activity. So sometimes the same agriculture individual was the guy who delivered or industrialized those products. So now that they expand the definition, it is helped because now also those activities will be considered as a.
And they will be entitled to this reduction that it's incorporated.
Yeah.
Also, one of the other changes considering the corporate income tax law is the retirement insurance. Corporations who make payments in one installments to individuals to the account of retirement or unemployment and old age will need to withhold and pay this income tax generated by these accounts. We're talking about different accounts to the ones to retirement and pensions. Also, there's a new part regarding house lease. If the persons if the person that issues that
the person who issued in this scenario of the house leasing is in Mexico, many taxpayers do not pay taxes when they lease their houses. Okay, that is something very common because most of the time it is paid on cash, right? So what it is happening in 2020, and this is also it's related with the digital economy, because as you are aware, what Raul was mentioned, the Airbnb tax, right? It's something that we will discuss in the first step, is that now it is mandatory to issue a tax invoice for the leasing of a house in order to be considered that the act is legal, right?
Yes. I mean, this change is for if the person that leases the house wants to go through a trial or needs to present wants to present a legal act. To do so, they will need to have the fiscal receipts. These are the CFDIs, as known in Spanish, for this revenue. Or if not, they cannot say, well, you owe me.
Yeah, and it's very common, right? When you lease a house, you sign an agreement for the term of staying of the apartment or the house, and that's all. You pay in cash or you make the withdrawal, but you never receive an invoice because nobody wants to pay the tax.
Yeah, there are very few individuals that regarding this activity, they issue a CFDI. Therefore, this change will say that it's not only validate having a contract, but you will need to present all these issues to say that you're reporting the revenue you have for this activity.
Correct. The invoice will be part the evidence or the proof if you want to go forward with your leaser or the owner of the property, right? Now talking about digital economic, as Raul mentioned, this is something new that is happening all over the world. I am aware that India, UK, and Europe are now recognizing these new taxes. And just to give you a background, I always like to talk about the Uber tax, Netflix tax, all those entities that for tax purposes are not considered taxpayers in Mexico because they are located abroad. And now with all the digital or all the technology IT system, you can provide a service wherever you are and enjoy it in other country. So what is happening here is it is supposed that when I ask for an Uber, the person who provides me the service is not Uber, it's an individual, right? So those individuals are not paying taxes correctly, or what authorities are saying is it's better that the corporation withholds and pay the tax on behalf of individuals, because individuals in many cases do not pay the tax, right? It's more easy to avoid the payment of tax. So what they are saying is it's mandatory to pay the tax by the individuals. They give the obligation to the individuals, but it gives the opportunity to the individuals to select that the tax paid has to be paid by the foreign resident, right? In this case, Uber, or in this case, Rappi or Amazon. So what Mexican tax law did is, okay, I will determine what kind of services you are providing, and depending on that service, I will give you a chart with the amount of taxable income that you need to determine on a monthly basis, and that will be the tax that these corporations will withhold. So as you can see, there is the chart for passenger transport and delivery of goods, that it could go up to 8% if you consider as taxable over 21,000 pesos. These amounts are in pesos. And also, as I was mentioned before, regarding the CFDI for leasing, Airbnb, I put Airbnb because we were discussing what is that services, right? It's hotel service, it's hosting, lodging. I don't know what it is. It's something like that. So it's more easy to say that it's an Airbnb, right? It's not advertising for Airbnb. I think everyone knows now what is Airbnb. So in this scenario also, it is considered that if I am leasing a room or a full apartment through Airbnb or any other provider of this kind of services, that company should withhold me a corporate income tax that could go up to 10% of withholding. And also, as you can see, we have a withholding of the sale of goods or service provision. And in this case, the tax, as you can see, is lower, because at the end it is supposed that if you are selling goods, it is mandatory to issue an invoice, because the person who is acquiring those goods would like to deduct the purchase. However, of course, there might be some articles or items that people will not want an invoice. So there is this scenario where you can decide to pay by a withholding. One of the other things that we need to have in mind is that this option may only be applicable for those individuals who do not have more than 300,000 pesos as taxable income during the year. So something that we were discussing is this will become mandatory on January 2020, right? So I need to turn around and see 2019 to consider that I have those incomes. It is not clarified. What we thought is, okay, I will consider that in my first year, I will not have more than 300,000 pesos as taxable. But if by any chance I have more income than that, then I think I will not have the option to consider a withholding. So in that scenario, I think that we will need to change the option for 2021, because it is not correct to have two kind of scenarios of withholding during the year. Also, it's very important to have in mind that if the taxpayer decides to be withheld, he needs to let them know the tax authorities that he wants to be withheld. So there will be a notice that all those taxpayers will need to submit before SAT. SAT is the income tax authorities or the IRS in Mexico. So we have 30 days following the first revenue is received in the platform. So if I'm in January 2020, if I get my collection on January 2, I have until maybe February 1 or February 2 to submit the notice. So that is something that we will need to do on 2020. If the taxpayer doesn't inform the tax authorities that he wants to be withheld, then taxpayers should pay the tax by themselves. And have in mind that if you decide to consider this as a withholding, the tax will be definitive. This means that I will not pay over a profit under this section. It's only income and withheld. If you don't decide that, you will be allowed to make deductions, okay? And for example, in the case of Uber, you will be able to decrease the gas, or if you fix your car or whatever is expense on the activities, will be allowed to be decreased on a profit. However, if you decide to go by a withholding, the tax will be considered definitive. Also, it is mandatory that the platform who performed the withholding needs to issue a CFDI or an electronic invoice to the taxpayer in order that them identify or have the source to prove that a tax was withheld. In the scenario that the individual do not provide you the tax ID in order to make that withhold, or he doesn't have a tax ID, because in Mexico that could be possible, then the platform needs to withhold 20% in all scenarios. Also, there is a disposition for VAT, and I think this is something that will affect us, because what the VAT law established is that all the digital services are considered to be provided in Mexico when the recipient, in fact, is in Mexico. So digital services, also the Mexican VAT law incorporate a definition of what is considered digital services. And well, what they are saying is download or access to images, movies, text, information, video, audio, music, magazines, whatever. So as I resume, what is this? It's Netflix, it's Spotify, it's Apple Music. It's also advertising through Facebook, through Instagram. As you are aware, when you are browsing in Facebook, you have advertising, you are downloading images, and someone is getting an income for that advertising. So those kind of services will be considered that were provided in Mexico when the final user is located here, right? So also included online clubs. I was saying the dating, like for example, Tinder, you know, if you pay for a premium account, then also it will consider that it is provided in Mexico. Long distance learning, there are many apps now that teach you how to speak English, how to speak French. So all those kinds of services will be considered that the service is provided in Mexico. However, in this scenario, what we need to consider is that who will pay the tax will be the final consumer or the user of that service. So what this means is that me, Jose, as a Netflix user, that I was used to paying $9 a month for enjoying all my movies, now I will have to pay that plus 16% of VAT. So what it is happening is that the Mexican tax authorities is giving the foreign residents, in this case Uber and Netflix, that doesn't have a company in Mexico, they only have a representation office, they will need to get a tax ID in order to be able to pay the tax that I pay to them. So they are giving the obligation to these entities to get a tax ID and to pay those taxes. And what we were discussing yesterday is this will become a new market, because I'm talking about Netflix, Uber, Didi, the big companies that we know that they are in the market. But for example, here in the firm we use a specific software in order to take care or to get the record of the time on the work, and we pay a fee or a license to use the software and services to use the software. So I'm sure that many small companies that are located abroad that provide this kind of digital services could be triggering this obligation, and they are not aware of what they have to to pay here. And the problem is, and I see it in this way, makes me, if I have a corporation and I am paying a service abroad that is considered a digital service, and I have an invoice for that service, and there is no VAT charged to me, the expense will be not deductible, because I am not meeting the requirements that when there is a situation under Mexican corporate tax law, it is stipulated that that expense will be deductible as long as the taxes were segregated in the invoice and paid. So imagine that scenario where nobody or this supplier provide me the invoice with not including the VAT, I will be in a scenario of a non-deductible expense. So it's very important, me as a Mexican taxpayer, to be aware that I'm not under this scenario. Also, now that I explained, these foreign residents will need to have a tax ID. They will need to pay the tax on the 17th working day after the month end. They will need to submit quarterly tax informative reports where they will inform the tax authorities from whom they collect the VAT paid. And they also need to provide an electronic invoice to the recipients of the service. That's why I was telling you, if I don't have the electronic invoice, for me, it will be not deductible, that expense. Of course, many of these expenses, nobody make it deductible. I hope I can deduct my Spotify or my Netflix, but that is not possible. But maybe for other industries can be possible. So it's very important to have that in mind. And also, it is mentioned, and have in mind that in Mexico, in order to be able to invoice or to billing, or to even to collect, we will need a bank account in Mexico. You will need a legal representative in Mexico also in order to help you to get the tax ID. So that this will be a new market. In Mazars, we are ready to help you in this kind of new service. So if you have any doubt or you need assistance, don't hesitate in contact us. But that is something new that, of course, if we see that this kind of transaction, we will inform you. And as we mentioned, this was focusing only on economic digital services, and this is something that changed, and it will become mandatory since January 2020. And also, if you want to return on that, this is a part of the VAT in the case that, as I was mentioned, I was talking about digital services, but in the case of Uber or in the case of Amazon, that they don't provide digital services, what they provide is like the connection with a third party where he put me in contact with the driver, or he put me in contact with the seller of the product that I need. Also, there was a modification. So in this case, Uber or Amazon will need to withhold the VAT of that service, of that disposition of the good. And it is mandatory to withhold the 50% of the VAT of that transaction. So in that scenario, it followed the same rules that we were talking about, the income tax withholding for the individual. The individuals or the provider of this service will need to do not have taxable income higher than 300,000 pesos. And in the scenario that that taxpayer doesn't have a tax ID, Uber or Amazon will be obligated to withhold the 100% of the VAT.
Okay, and now getting more into detail in the changes that we have seen, they have been introduced into the VAT law and also the excise or EFS law in Mexico that we mentioned them previously as bullet points, but we would like to emphasize in a couple of them, as for example, in the VAT regulations. Well, it is not new that the government have been making efforts on going forward the outsourcing companies or schemes. So every time we have this specific activity or scenario more regulated in Mexico, and as Daniela were mentioning previously, one of the parts that we have that it is going to have a specific or significant impact in this kind of entities, it is the withholding on these kind of services. So in which regard to VAT, one of the main things that we need to take into consideration is that anytime that we have personnel of any particular entity that are not an employee of the Mexican entity, but if they are in our facilities or in our offices, even if they don't have any specific supervision or direction from us, they are going to be considered as part of an outsourcing scheme, whatever this is the name that we give to that scheme or not. So an applicable 6% of withhold on the VAT are going to be applied. So this is something new that we didn't have previously. The main change it is that before this we have some regulations that mention which is a specific outsourcing scenario. We take out of the picture the outsourcing parts of what it is or not outsourcing. So anytime that we have personnel that it is not an employee from us, and where we can fall in this scenario when we have security guards or where we have cleaning services in the office, they are in our facility. So in that case, that companies or suppliers that provide us that specific service need to include a withhold in their invoices, and we need to file that withholding in our monthly installments.
And here, just to clarify, and this is one of the very important effects of the reform that will affect many of the companies in Mexico, because as Jose Luis mentioned, before 2020 reform, there was this issue between labor law and Mexican corporate tax law. And as you are aware, in Mexico, we pay profit sharing to employees. So the government is like trying to ask to corporations to do not create schemes in order to avoid the payment of profit sharing. But that is something more on labor. So this withholding, when the reform was proposed, in the wording of that reform, it was stipulating that the withholding will only apply to outsourcing services. And the issue that we have in many of the corporations is that me as a tax advisor, I cannot confirm if you are in an outsourcing scheme because I'm not a labor expert. So you need that someone review your agreements in order to confirm if you met the requirements to be considered as a outsourcing entity or not. So I always was saying to my clients that before deciding that we will go for a withholding, confirm that you are really on an outsourcing scheme, because if you are not and I apply the withholding, I will put you in the scenario that we are assuming that you are in an outsourcing entity, right? But with this modification, as you already mentioned, they delete the word outsourcing of the new reform, and they are saying as long as someone is working on your facilities, it doesn't matter that he's not under your direction, it will be considered that you have a withholding. I like it because I'm not confirming that I'm on an outsourcing scheme. For me, if you are a normal taxpayer and you are paying, it doesn't matter to have a withholding, but we will see what happens, because if I am the cleaning provider of the individuals who came to my company, I don't know if he will be willing to segregate the withholding in the invoice that he will provide to me. And also, we as Mazars, sometimes we have some projects when we have implants in companies. So I'm sure, and we following the mechanic on the law, we will need to build that with a withholding, because I am aware that it is a new provision. So let's see, as I mentioned, it is pending to be published, the resolution miscellaneous, tax miscellaneous, if there is any change. But from now, it looks that we will need to withhold in all kind of transactions that we have in this kind of scenarios.
Yes, thank you. So well, also another part that it is important here is in the part of the excise tax that we have. Well, also in the efforts of the government to increase the tax collection in the country, they have increased in some specific items like in tobacco or in flavored drinks, the quota that we have from 1.17% to 1.27%. And here one of the important parts is that this specific quota can be subject to an annual update. So according to the federal tax code regulations, so we just need to keep that into mind.
Well, entering the last part of our presentation, we will review some of the changes included in the federal tax codes. One of them is that they're incorporating a new article that is about anti-abuse rules. This rule says that if the acts I have as a corporation are, the tax benefit is more than the expected reasonable economic benefit, then the tax authorities can presume the non-existence of a business reason. This says that, for example, if someone within the tax authorities reviews and says that there's no business reason, then they will review the act done, because as I always say, corporations in Mexico needs to have a profit or a business to operate. We cannot use tax schemes to avoid this part. However, this article is not very clear yet, as we mentioned in the first part of our presentation. We believe that the general tax rules will enlighten more about this subject. However, this article does contemplate the definition of the tax benefit and of what is an expected reasonable economic benefit.
Okay. And just to have in mind, it is not mentioned what is the possible penalty or what will be the result if you are under this scenario. But of course, if you are under an audit and they identify that you have this kind of tax benefits or acts that doesn't prove that it was made to have a real economic benefit, it looks like authorities will have the right to reject that operation. But it's not clarified. We are waiting to see what it is, because now we will talk about the reportable schemes that I think is part of what they are changing in the law. But it's very good to have in mind that now that we will, if you are planning to carry forward any transaction that may be made it only for the tax benefit, authorities now have the right to maybe reject that.
Yes, well, just to add a little bit more, it also explained that that the tax person that reviews the situation, to say so, will need to report this and to be submitted before to a committee of tax officials, and this committee will have 2 months to review the scheme and to say if it's not within the beneficial risk. Yeah.
Okay. Agreed.
Okay, so as we were mentioning, well, also the government in their efforts to follow the global trends that we have to, according to the BEP actions, we have a full new title in the law that refers to how we as advisors, or also the taxpayers, are individuals or entities, needs to report the well, in this case, reportable schemes that mainly are well, schemes or strategies that we get in place to have a benefit in Mexico. So in this case, mainly this title says that the tax advisors and also the taxpayers shall inform and report to the government the structure and the specific scheme and all the parts that are integrated in them to have a tax benefit in Mexico. So this is also something new that we have in the law. I think that we have a lot of items that we can say that we have a blurred line there, so they can be subject to interpretation. But focusing on when the tax advisors are going to be
taxpayers,
the taxpayers are going to be filing this report, it is when the tax advisors does not provide the identification number, that this means the evidence, because only one of them needs to file this report and to inform to the authority the scheme. So if the tax advisor does not file this specific information, and as a taxpayer we don't have the number or acknowledgement receipt, we can say, of that filing and report, well, we as taxpayers needs to inform the full scheme. Another part, well, it is when the scheme has been designed by the taxpayer itself, that this means that no tax advisor were involved, or when the employees of the taxpayer implement any specific scheme to obtain a tax benefit for the company. Here it is important to mention that the taxpayer, it is going to be filing the report, and the individuals are going to be relieved of filing this part as employees. So, well, another scenario is when the taxpayer obtains a tax benefit in Mexico for a reportable scheme, even, as I mentioned, if we're structured by a tax advisor or not, or by the same company, well, the taxpayer is going to be the one that files this report. And well, we have a couple of different scenarios when the foreign resident with no permanent establishment has the scheme in place, and also when we have a legal impediment with that, well, avoid that tax advisor to file this specific report.
And here, just to be like, as Jose Luis mentioned, let's put in mind, there are two scenarios. Me as a tax advisor should report this, or taxpayer should report this. And what I have to report, okay? Here, the article 199 explains or say that a scheme is any plan, project, proposal, advisory, instruction, or recommendation, expressly or tacitly expressed for the proper purpose of materializing a series of legal acts that will generate a tax benefit. What is a tax benefit? Is any reduction, elimination, or temporary deferral of a tax obligation. And here the Mexican tax authority says, I will have two kinds of reportable schemes: generalized reportable schemes and specific reportable schemes. And why we have generalized and why we have personalized reportable scheme is that authorities is planning to gather or to have a database of schemes that for Mexican tax purposes they consider they are okay. So the first one that we will gonna submit, of course, will be personalized reportable schemes, because income tax authority doesn't have that database. Once that they begin to have this database, these new tax schemes will became generalized. And that is, I think that's something good, because that will be certainly to the tax decision that the company will have. We were discussing yesterday that maybe in the future, tax planning will be go to the website of the Mexican tax authority and see who are the generalized schemes that are there, and you already have the okay from the Mexican tax authorities, right? So this is what we need to submit. If we go to the next slide, we put some examples on what would be a reportable scheme and what it would be a reportable scheme when there is no information exchange regarding the countries. Maybe Mexico doesn't have a treaty with UK and there is no information exchange. Maybe that will be something that we will need to report. If there is a refipre or a tax haven or a preferential tax regime where you are having a transaction, we will need to inform that. If there is a permanent establishment incorporation or a situation that will trigger that, we will need to inform that. Identification of a beneficiary, revenue foreign entity, or even a dividend tax. Other assumptions, for example, will be very important. Treaty shopping, if we are under that scenario, that we will trigger a hybrid scheme. A transfer of tax losses. If I buy a company, that is very common in Mexico, where there are tax losses, that was something that I will need to report. And something that is like very complicated to understand, because there could be many scenarios. There is one provision that says a difference of 20% between books and tax records. So when I am doing my tax return during the year, if I have an item that will generate a different, I was thinking it could be an accrual, it could be a deferred effect. If I have that scenario, I will need to report it. So that's something that we need to have in mind. And also be aware that the report do not imply the acceptance or the rejection of these types of schemes. And also, authorities cannot use this reportable scheme for saying that this was a tax crime. It cannot be used for those purposes, and it is supposed that it is a fiscal secret. When they will publish the general schemes, they will not put any name of who is using this kind of scheme. They only explain what would be. And just to add, have in mind that this is not something new. As Raul was mentioning to me, he was in Europe a couple of weeks ago, and the European Union already have the directive DACC 6. That is the same thing that we are talking about here. It's something that was provided by the OECD. So it is, we have to be aware that in other countries we have the same situation. And I'm aware that it is complicated, but we need to follow those procedures. The next slides are what we need to include in the report. That is very easy. You have to put the tax ID, the number of the advisor. We will provide you the presentation because I know we are very short of time. We almost finished. If you can go, Daniela, to the next one. This is also part, and this is the important part of the information that we need to submit is, if it's a generalized reportable scheme, I need to submit the informative return 30 days following the first contact for the commercialization. And what is considered commercialization? Well, when actions are taken to let the third party know the scheme. So this is when me as a tax advisor provide the memo or provide a presentation with the steps that he needs to follow. So I know when I'm at the tax advisor, I know when I have to report this. We cannot say that I am not aware when I provide that. The second step is when it's a personal reportable schemes, that we will be the first one that we will have to submit. It's the same, 30 days following the day in which it is available for the taxpayer. What is that? Well, when it's available for implementations or carries out the first legal act. If I have a merge, for example, well, I can consider the date of the merge, because that is when the act happens. 30 days after that, I need to inform the Mexican tax authorities. It doesn't mention when now. Before that, they were talking about 8 months, and they will analyze with the changes of that. What they are saying is they can require you anytime they want if they think or they have doubts about these schemes, and they will give you 30 days after they notify you to reply and provide the information you need to clear a fund. Other thing that is very, very important, this will become mandatory until January 21, okay? So we have until that year to figure out how we want to report this. And the 2020 schemes, that is very important because they are considered, 2020 also has to be reported only by taxpayers, right? Have that in mind. And well, the problem that we face here is penalties are very high. If we don't report the scheme, it could be up to 20 million pesos. Or not filling the informative return with errors, it's 70,000 pesos. So if you can see, that's something that also we as a tax advisors, I'm taking in consideration those kind of new penalties that arise from this reform. So what I will say about this is, don't be afraid. I think that it's something that has happened in other countries. We need to report it, of course. I don't want to face a penalty of this high. And of course, we as a tax advisor, if we are in a scenario that we want to provide you an advice, we will let you know that we will need to inform that if that is the case, and if we can consider that is reportable, right? So I think we are very short on time. We will leave the presentation 10 minutes open. If you want to make any question, please make it to inside the application, as Raul mentioned, and we will reply all your questions by email to don't take more time, because we are almost finished.
Yeah, so thank you very much for joining us in this presentation. Like Pepe was saying, please send your questions to us. We don't have more time right now to be able to answer them, and we will make sure that we reply to your specific questions. So thank you again for joining us, and we will shortly let you know when our next webinar is going to happen. So thank you very much again.
Thank you.
Thank you.